Welcome to BigONE Weekly News Update. I'm Gavin. Crypto markets closed the week in positive territory, with Bitcoin gaining approximately 2.5% to around $65,000. Ethereum rose roughly 2% to $1,900, while Solana climbed 4% to about $76. Hype also advanced 2.4% to approximately $55. The broader market environment was equally supportive. Weaker than expected U.S. non-farm payrolls reduced expectations for further rate hikes, triggering a broad rally across risk assets. The S&P 500 and Dow Jones both reached new closing highs, while Europe's Stoxx 600 also posted a record close. Treasury yields fell sharply. The dollar weakened to a 1.5-month low, and gold, silver, and other precious metals gained more than 8% over the week. Bitcoin ETF demand strengthens despite continued corporate selling. One of the most notable developments was the divergence between corporate Bitcoin selling and institutional ETF demand. MicroStrategy announced another sale of 1,638 BTC last week. At the same time, the company spent $81.2 million repurchasing its STRC preferred shares, raised $290.6 million through common stock sales, and increased its dollar reserves to approximately $4 billion. The reserve is now sufficient to cover preferred dividends for roughly 2 years and 4 months. Meanwhile, U.S. spot Bitcoin ETFs recorded their third largest weekly inflow of the year. BlackRock's IBIT alone added approximately 10,760 BTC, signaling a meaningful recovery in institutional demand. The contrast suggests that while some corporate treasury strategies are becoming more defensive, traditional institutional channels may be regaining confidence in Bitcoin. Clarity Act progress slows. Regulatory momentum in the United States has weakened. The Senate postponed voting on the Clarity Act, with no vote expected during August. The delay has significantly reduced expectations that the legislation will become law this year. For the crypto industry, the timing of regulatory clarity remains an important factor in institutional adoption. A prolonged legislative process could delay decisions by businesses and investors waiting for clearer rules around the digital asset market. Ethereum and Solana reconsider their inflation models. Ethereum and Solana developers are also exploring significant changes to their respective tokenomics. Ethereum's EIP 8361, known as tapered issuance burn, proposes increasing the proportion of validator rewards that are burned as the percentage of staked ETH rises. If half of the total ETH supply were staked, the proposal would eventually burn 100% of validator rewards, eliminating issuance incentives beyond that point. At the current staking ratio of roughly 1/3, consensus layer rewards could fall from approximately 2.6% to 1.2%. MEV and priority fees would remain unaffected. The proposal is still in draft form and has not yet been scheduled for a vote. Solana is pursuing 2 separate governance proposals. SIMD 0550 would increase the annual disinflation rate to 30%, bringing the 1.5% terminal inflation floor forward from 2032 to 2029, and eliminating approximately 18.9 million SOL in future emissions. Meanwhile, SGP 0003, which includes SIMD 0553, would replace Solana's fixed per-signature fee with a resource-based model linked to transaction computing demand. Fees would be fully burned, potentially increasing daily SOL burns from around 650 to between 7,500 and 9,000 SOL. Both Solana proposals have secured the 15% active stake support required to enter the discussion phase, followed by discussion, stake snapshots, and voting. Approval ultimately requires a 2/3 supermajority of decisive stake. Crypto-related earnings deliver mixed results. Recent earnings from crypto-related companies offered a mixed picture. Circle's core EPS came in at $0.30, broadly matching expectations. Despite a 42% year-on-year contraction in the overall crypto market, USDC circulation increased 12%, while stablecoin transaction volume share reached a record level of approximately 70%. However, increased investment in ARK, declining core other income, and higher expenses led to a roughly 6% reduction in full-year core pre-tax profit guidance. Galaxy Digital also reported mixed results. Its quarterly loss of $0.09 per share was better than expected, while digital asset revenue increased 34% quarter over quarter, and its data center pipeline expanded beyond 5.7 gigawatts. However, the delay of Helios Phase 2 to the second quarter of 2027, 830 megawatts of capacity without a tenant, rising financing costs, and a Texas state audit pushed the expected earnings timeline further out. Galaxy shares fell 14% on the day. The week ahead. The market will turn its attention to several important economic and crypto-specific events this week. Key developments include the release of US CPI and PPI data, earnings from companies including CRWV and NBIS, and an upcoming APT token unlock. These events could provide further clues about inflation, liquidity conditions, and market positioning. Conclusion. Crypto markets are entering a period of consolidation, with Bitcoin holding around $65,000, while institutional ETF demand shows renewed strength. At the same time, corporate Bitcoin selling, slower US crypto legislation, and evolving monetary conditions remain important factors for investors. Beyond Bitcoin, Ethereum and Solana are exploring major changes to their issuance and fee structures, potentially creating more deflationary tokenomics over time. With inflation data and further market catalysts ahead, the next few weeks could determine whether the current range-bound environment develops into a broader breakout or another period of consolidation. Join BigONE today and take advantage of the growing cryptocurrency market.